Okay, so we are live on Facebook, YouTube, LinkedIn. This is the Mobile Mailbox Money Mastermind live deal flow market. Welcome to the family bank here with Mobile Mailbox Money, Silvercrest Opportunity Fund, and Win Mobile Homes. I'm here today with my cohorts, Sonny and James Guajardo. In the local market of Arizona, we've done 350 transactions, $15 million in private capital allocated towards our strategy. We'll be going over our deal flow today and why it's an opportunity. But I'll just let Sunny kind of quickly introduce herself and we'll kind of get the meeting rolling today.
My name is Sunny Finkel. I've been with the company 2 years now. I have experience in real estate and mortgage brokering. I am the investor relations specialist. And I'm happy to help with any questions you have or to work on some due diligence with you or to just go over with you some of the notes that we have available and how you can invest with us.
Sonny, what are some frequently asked questions from people that come out of the blue into our ecosystem?
I would say mostly due diligence questions. I mean, everybody wants to be careful about where they have, where they place their money. And with all the affiliations that we have between being licensed, bonded, NMLS, registration, we have the ability to give that confidence that we are able to handle transactions up to any amount.
And I got my partner here, James Guajardo, my father. James, if you could just introduce yourself, a little bit about your background.
So James Guajardo with voice that's wrecked for right now, hopefully getting better soon. I'm president, Win Mobile Homes, Mobile Mailbox Money. We've been in this market since 2000, strong in the market since 2018, so about 8 years now. We've got a ton of inventory. We've got a full staff of rehabbers, back-end staff employees. Our goal is essentially to create opportunity in the note market where we're a licensed note originator, and based off that origination, we can create first lien positions on mobile home notes.
So licensed, bonded, and insured in manufactured housing under the Department of Housing. We have what's the election of the type, license?
It's a D8. We hold a D8 license as a dealer license to buy, rehab, and resell manufactured homes.
In addition to our licensing in Win Mobile Homes, we are also a Reg D 506C accredited investment fund, providing bank quality returns and cash flow in as little as a 30-day program. Currently, we are offering in Silvercrest to accredited investors a 10% return for a 1-year term paid monthly, a 12% return for a 3-year term paid quarterly, or a 14% return for a 5-year term paid monthly. And that's cash flow in as little as a 30-day program with 50,000 up to $1 million at a time. Can help you start earning interest in as little as 30 days. Got a lot of deals going on right now. There's something in the water here in Arizona, or maybe it's the weather, but with our 50 homes in inventory, we have about 8 in escrow right now. 3 or 4, maybe 5 that have actually been approved for financing. We'll talk about a couple of those deals today and open it up for any questions that you may have. Remember, this is as involved or uninvolved as you'd like. Really, we encourage you, if you feel the need to do so, to shoot a question at the messenger or even unmute yourself at that time. So I'll just kind of share my screen here and we'll kind of get into the meeting today. Also, we have Activate and Elevate actually coming up here in February. It's February the 23rd. They have their 2 conferences in Vegas that we will be attending. We actually have booth space there. That's the largest private lending law firm in the nation. So if you're free on those days and you want more information, feel free to put that in the chat. We could get that to you immediately. These are all live deals, people. That's why I call this the live deal flow market. We talked about 2 or 3 of these last week as they've now been formally approved, but it's a first come, first serve first come, first serve deal flow. So don't hesitate to speak up if you see something that you like, or possibly a due diligence question, because time is of the essence. These deals hopefully will get closed within the next week to 10 days before the end of the month, and then we'll have a whole new rack, hopefully, of new deals coming down the pipeline. So these pictures and photos and homes are all seen at windmobilehomes.com. Let's just kind of get into it real quick, okay? So lot 134, we talked about this home last week, but this buyer's actually been formally approved on financing and through the park.
This is actually on the way to the closing table as we speak. And this is a really killer deal because it was a $45,000 sale and the borrower actually put $10,000 down. So it is a sweetheart of a deal with instant equity.
So they went from 8,000 to 10,000 down.
Yes, they did.
That price was 45,000, correct?
Yes.
At 45,000, I'm just going to run a mortgage calculation on Carl's mortgage calculator. We're not sponsored by them quite yet, but you never know. So 10,000 down, $45,000 price point, over 20% down, 20-year term, unpaid balance, or your acquisition cost is $35,000 over a 20-year term, paying $435.23 a month. This corner lot is in the Mesa market in a gated 55 and older community. We've done probably $2.5 million in transactions just in this one park. That's probably 30 transactions, but it's a rehabbed property, brand new granite, brand new cabinets, brand new laminate. These updates were done after we acquired the property. So we did all of this work with our 15 in rehab and now have it pending for close, possibly even today. So that will allow us to place your desired lien position with your desired entity, whether that's your solo 401k, your IRA, your fund, all areas of potential opportunity, and to find a $35,000 note at this double-digit interest rate with a double underwriting is virtually non-existent out in the market. So that's $35,000 paying $435.23 a month in first lien position, backed by this home and the buyer's ability to repay. So performing collateral, that's off major cross streets of Ellsworth and Broadway in Cielo, Grande. And you can see these photos at windmobilehomes.com, lot 134. So I believe this home will go very quickly given the affordability of the acquisition and the down payment from the buyer borrower, creating a high level of risk mitigation within this transaction. That's a two bed, two bath. Let's move on here. We have our brand new 2023, never been lived in, manufactured home, 2 bed, 2 bath, actually pending right now. The buyer's been approved by the park, I believe, and they are signing their promissory notes and such to usher forward towards closing. For us to get a brand new home is very rare. Historically, we're dealing in used inventory, and this kind of just came about. We actually bought 2 of these in the same park. It's a family community, and bought them at a deep discount, so much so that we just put this one back up for sale and got a full price financed offer. This home, let me just pull up my notes, is lot 216 in Grande, Missouri Mobile Home Park, 2023, 2 bed, 2 bath. The buyer borrower is paying $97,500 with a $4,000 down payment. Their unpaid balance is $93,500, or in other words, your acquisition fee in exchange for collateral like this. A buyer borrower with skin in the game, they'll have another $2,000 in closing fees, prepaid insurance and taxes, things like that. But at a $93,500 unpaid balance, their monthly payment is $1,231.20. So over $13,000 a year in passive cash flow with a brand new quality collateral, deserving borrower, double underwritten in risk mitigation. This park actually recently traded, which was interesting. I think that these homes, they sold to us because they were trying to clear their portfolio before a sale, and that ended up taking place. I think it's Park Haven now that manages that community. We're always on the look to buy a mobile home park and bring that to you actually watching here today. The challenge with that in itself is cap rates are so highly competitive. Where in comparison, we are creating literally a mobile home park every year in passive cash flow at pro forma in the same asset class, but a higher yield and less risk out in the market. What's the lowest risk investment strategy in the nation? It's first lien notes. So that's 93.5, 1231 a month for 20 years on this brand new double wide manufactured home. This is in the Glendale market. And we have, I think, 30 homes off those major cross streets or close to it. So, our expertise in the valley is pretty much Mesa, Tempe, Phoenix, Glendale, Apache Junction, and Peoria, Chandler, and Phoenix. So we know the market. This property fits appraised value. The replacement cost of this home actually to go buy brand new and bring it into the community is upwards of $125,000. And then they still have to make a profit on that transaction. So confidentially, we actually bought these at $45,000. So $80,000 under market value. And we got that deal, I think, because the park was trading hands. So, how to find deals like that, you really got to be in the right place at the right time with the right relationships in order to button something like this up. So those are two notes actually immediately available, highly unique in each, high down payment on the other one, 55 and older hedge, people are on guaranteed income like Social Security and things of that nature, or a family park as you see before you for the longevity of that potential note. Let's keep it pushing here. We've got lot 30. Lot 30, I think they went to the park yesterday to formally finish their application processes. Lot 30 is located off Broadway and Val Vista in the Mesa market. This buyer's paying $75,000. I actually met him already. I happened to be walking this home with another potential buyer, and he happened to just show up. It's kind of funny. I thought that they were together, honestly. So nice gentleman, becoming of himself. This park in itself is a gated 55 and older community with water fountains, real grass throughout the community. Definitely higher in quality than most mobile home parks here in the valley, and institutionally owned actually by Sun Communities. Sun Communities is owned by Warren Buffett. So, Warren Buffett investment strategy in this park and in this asset. These pictures, I noticed just two before that the sink wasn't installed. We do have completed this actual remodel, and the buyer borrower is approved for financing. They're getting approved by the park. So this will inadvertently come available. What does that look like? $75,000 price point. The buyer borrower is putting a $4,000 down payment at $71,000 paying $882.90 a month. And this one, I think, actually is a 1% pref. I'd have to verify that on our regular interest rate. But at $882 a month, $71,000 in exchange, you get a first lien position on this property and cash flowing in a Warren Buffett community on a desirable area. Mesa has historically been pretty sleepy. Well, with the new desirability of the Arizona market, people are flocking to other markets here in the valley outside of Scottsdale, Paradise Valley, and Phoenix has even started to get pretty aggressive in pricing. Whereas in Mesa, they can get more bang for their buck, probably more square footage and livability, but also, not compromising on quality. So this actually home is ground set, which means no steps. And I think probably 99% of the homes in this park are actually ground set. So it adds to more of the neighborhood feel within this community, opposed to a bunch of fluctuating elevation within the park. It feels like a real community, with water fountains, grass walking areas, dog park, indoor pool, pickleball, dedicated management. They got a whole clubhouse. So the buyer borrower is moving into a real community. It's not a trailer park boys situation by any means. But at $71,000, that's $882.90 a month for 20 years. Does anyone have any questions? We'll open it up. Remember, this is as involved or uninvolved as you'd like. These notes will get placed over the next 10 days. Whether you pick it up here or not, we'll be putting it out to our platform and circulating it with our regulars at the end of the day to find a double-digit interest, double underwritten performing collateral out in the market. Most people don't even sell these positions, to be frank. But for us, we do so many amount of transactions every month. We either have to leverage these positions, which in other words means hypothecating it. So this same note, let's just go back real quick on lot 30, just to kind of break this down quickly for someone that may not want a 20-year term. So hypothecation means to pledge an asset in order to garnish capital investment. I'm getting a collateralized loan against my performing note, say on lot 30 at $71,000. And in exchange, instead of a 20-year term, right, that same $71,000 for a 1-year term could provide you a monthly payment of $591.66, and we service and manage that note. So if any risk does come to fruition on this home, Wynn Mobile Homes ends up taking back the asset at no cost to the investor, continuing to make the payments and reperforming this, likely either selling it to someone for cash or reseller financing that position for possibly even additional profit. Pricing's kind of fluctuated over the last 5 years. This same home was $30,000 5 years ago. It's now $75,000. And I believe in this park, we've seen homes resale for upwards of $200,000. So hypothecated position, 1-year term, paying $591.66 a month. That's over $6,000 a year in passive cash flow and a 1-year liquidity. So in a year from now, I'll say, hey, congratulations. You've been receiving your payments. Would you like to auto rollover or liquidate your position? Maybe you have a kid going to college or a new wedding, or you want to take a trip, all areas of potential opportunity. If you're accredited, I'd love to absorb this note into my fund where you become a per unit owner, share in my portfolio. And I think we have 25 positions currently performing. We're earning $20,000 a month in interest. And that's really just the past 6 months that we've received some larger capital infusion. So knowing that, stable within the program and high velocity, $1 million could get deployed really in 30 days and start earning interest. So just wanted to talk about the two differences of buying a whole note for the full yield, or maybe you don't want an asset for 20 years. That's completely understandable. People are wanting options, to have options out in the market is virtually non-existent on an annualized program. So, all right. So we are now at lot 123. Sorry, my cleaner just walked in here, actually. So at lot 123, Brentwood Southern is 49.9. The buyer borrower has been approved. Is that correct, Sonny?
They have not been Dodd-Frank approved yet. They just made their earnest deposit this morning. They did put in a full priced offer at 49.9. They're putting 3,600 down, leaving a note of 46,300. and the payment on that is $575.75. And it's 3 adult borrowers all in one unit, so very low chance of default.
I mean, for us, we sold this at a discount for 50,000. You got a kitchen island in granite. The built-in oven right there is probably $2,000 in most cases, and your stainless steel appliance package. We even did the tile backsplash in this property. We're doing more to ultimately, if we end up have to repossess this property, that it'll be in good condition. We're not just seller financing a manufactured home. We bought this, rehabbed it, and now have a potential buyer borrower coming to the table. They'll get double underwritten. We'll have a mortgage officer sign off on the loan, and in the want for full compliance, most people say, oh, don't do business with people on the internet. This is the real deal right here. We do this live and post these on across social platforms. But this is how business is done today. So to know the background of how it came to the table, I think we bought this home from a individual that was in distress. They were bleeding to death from lot rent, and us being pre-approved in this community, doing upwards of 30 transactions in this single park, and probably 100 transactions with this entity in Fountain East, Brentwood Southern, Cielo Grande, and Sunnycrest, and maybe 1 or 2 more, La Montaña del Sur, so deep relationships within these communities. So you're getting a first look and understanding of what that looks like, why it's an opportunity, and for what was the unpaid balance?
46.3. If you go back through the pictures again, this property has a ton of upgrades. It has an completely enclosed Arizona room, or Florida room, we call it, but a sunroom, and parking for more than one vehicle, which is really important to a lot of the borrowers. That bay window is really nice. It has built-ins. That one has really a lot of nice upgrades, and it looks really nice from the outside too. Really clean outdoor storage. There's the Arizona room. This is a really nice one.
We'll keep it pushing here.
Is that because I think Alden said Sunnycrest?
It's actually Brentwood Southern, but I like the way you think, Rodney.
So appreciate you chiming in today, Rodney, keeping it light, keeping it bright. So we've got lot 132. Lot 132, we just got a verbal commitment on. The buyer borrower is signing their promissory note, and I think it's closing early next week. So this note is sold. It's not sold till it's sold at the end of the day. But the investor that we met actually through the Note Investor University and Diversified Mortgage Expo will be buying this note, and 99% sure that they're doing so. So they'll take advantage of the 1% pref on our regular interest rate for this transaction at 121,000. Their monthly payment that the investor will be receiving is $1,492.22. She's making $15,000 a year in passive cash flow with no banks, no management, no insurance, no taxes, just cash flowing, bona fide cash flow in a collateralized lending opportunity. And she happens to be a note investor. She's pledging this position, this note performing asset, at less than what the note yields. So say she takes this position and borrows from Uncle Tony that has $10 million, and in exchange for $121,000, he gets his lien position on this property. She pledges it at 10% or even 8%. If he has sleepy money at 5% in a CD, and arbitrages the interest rate, effectively creating a margin on the interest-bearing contract and making 4%, say 4 or 5% within this transaction with none of her own money, and actually just orchestrating the contracts. That's hypothecation, and really game-changing stuff to be able to do that. Looks like we have a comment in the message section here. Oh, Sonny just replied. We received the mobile email from my other partner for investors team. They shared it, but we don't usually receive emails from the company. If you don't receive our emails, don't hesitate to let us know. We'd love to possibly send you a one-off or whatever it may be. You know, communication's of utmost importance. So happy to get nimble in that accord. We talked about this land and manufactured home combination last week. We'll bring it up again because we have yet to receive an investor for this property. It's a performing, is this a 3-1? I forget how many beds and baths. James, Desert Dawn, how many beds and baths is that?
3-1.
It's a 3-1. Perfect.
Correct.
So 3-bed, 1-bath off major cross streets of Ellsworth and Broadway. This is a land and manufactured home combination. We did a rehab on this property, put in new laminate flooring, checked all the electrical and plumbing, and have a performing 5-year lease on this transaction. Kind of a little different than a seller finance note because we don't have to worry about the strict requirements to seller finance. We leased the property. They wanted long-term rent, so we provided that. What are they paying for this property? It's $2,500 a month. We're making a killing on this property, and these are some pre-rehab photos. Looks like us going through the home, but at $2,500 a month, this property is worth how much, James?
That's a actually $185,000 to $200,000 home that resells in that park. That's the value of it.
And these are some pre-rehab photos just to kind of view a little bit more intimacy of what we've done. But it say at a $200,000 price point, which is really what I believe the property is worth given the lot location and low HOA. HOA in this park's like $40 a month, I think it is. So at $40 a month and $2,500, I bought this property from a contact at ASREA, Arizona Real Estate Investors Association, who now we're the main corporate sponsor for one of the largest real estate investment associations in the nation. Let's cut to the chase. $150,000. That's 75% loan to value at a $200,000 valuation. And in exchange for $150,000, you get a first lien position. And these are the yellow exterior was previous. We'll get some updated photos for somebody that's interested. But at $150,000 for a 1-year term, that's $1,250 a month. We're still cash flowing, $1,250. We're making the same rate. And actually, you're getting primary senior lien position on this property in a desirable market with a performing rental. And we are almost getting, say, a private DSCR loan from our investor on this property for a 1-year term at $1,250 paid monthly, 75% loan to value on this property and a performing rental. Say someone wanted to ride it for 3 years. What does that look like? $150,000 times your proposed return divided by 12 is $1,500 a month for a 3-year term. You're making over $15,000 a year on one door with no banks. We're the bank, and you get your first lien position in this property. That's a 3-year term, paying $1,500 a month at $150,000 potential loan that you would be extending via investing in our program. So that's off major cross streets of Ellsworth and Broadway. So this property, I'm going to kind of switch gears a little bit here. So what happens when a property has been seller financed and that buyer borrower goes non-performing, right? It happens. We have a 2% default rate, so a low default potential for the people buying our notes, but it does happen. If you do enough transactions, you're bound to have a quote unquote winner at the end of the day. This property we seller financed at a affordable price point. I think we sold it at $50,000. They put a $5,000 down payment, maybe 6, but the loan balance is $44,000. This is off Kyrene and Baseline in a community that we've done probably 20 transactions in the Tempe market. So these are some pre-rehab photos actually of the rehab that we did. I'll get to the finished product, but we bought this home in this condition, and seller financed it to an individual who actually went non-performing. So just kind of a little bit view of what condition we buy these properties in, right? This is not its current condition. Okay, so I'll pull up the finished photos here in a second, but just kind of give you a little view of kind of some stuff that we acquire. So this property now went through our formal rehab. We have the laminate flooring and things of that nature that we do on every property, white and gray paint, check the electrical and plumbing, and seller financed it to an individual. That's where we're at today. This homeowner actually has formally went to court this morning and formally been evicted. How long did that take from non-payment to ultimately getting back to our repossession? It's a 40-day process. So within 40 days of non-payment, we repossess the unit, go through our writ of restitution, and retitle the property. At that point, we remarket it and likely reseller finance this home because it's in the Tempe market in a desirable area. Got some hearts and thumbs up going. You know, a lot of people wonder what that looks like. It's 40 days. We're in comparison in a single family note or mortgage that you bought, you know, depending on if it's in a trustee deed state or not, could take upwards of 6 months. You know, we've now gotten retitled to the property, I think here in the next 3 days, and ultimately we'll resell this home. And what does it cost? You know, what does it cost to get that buyer borrower out of the equation and retitle that property? Well, our attorney is actually $750, I believe it is. So $750. I think he'll have a month or two in back lot rent, so that's like $2,000. So say it's $4,000. We repossess this unit and own the property, right? Because our lien position facilitates our repossession of the unit. Your entity now goes on title and we remarket the property. If you bought a whole note from us, you get access to our back office at cost. So we don't leave you high and dry to go find your own attorney, pay a $5,000 retainer fee, and have someone probably that doesn't know so much about manufactured housing. And that's a turnkey solution that we offer to anyone that buys a note from us at the end of the day. We could charge a fee to do that, but we don't, you know, in the want for additional business. So that being said, you know, like $3,000 probably will be out of pocket. Repossess this unit, and this home with a $44,000 loan balance being in a family park, a 3-bed, 2-bath, will actually have a fair market value at $99,000. Maybe a little bit less, but we will effectively make $40,000 repossessing this unit. That's additional profit made from a repossession of a risk that's gone awry, really, at the end of the day. Are we going to make, you know, 20, 30, 10, 5 every time we repossess a unit? That's not the case. You know, past results are not indicative of future outcomes, but you know, depending on where the market's at, what the loan balance is, there could be additional profit or potential loss within that transaction. The capital stack is of utmost importance, making sure that your buyer borrower is having ample skin in the game in order to mitigate that risk. But it does happen, and that's just kind of a little look of what it looks like when your risk does come to fruition. And I think I hit a hair there because a couple people were reacting in the chat. So that's kind of something that people ask at the end of the day. So we'll kind of keep it moving here. Let's see if I can reorient my screen. Bear with me. Does anyone have any questions while I'm getting lost on my screen here? So if you haven't yet, follow me on Facebook. You know, I post 3 times a day with unique opportunities, unique videos, education. I arbitrage artificial intelligence, so we have a lot of avatar education out online, as well as I want to pref that again, we will be at Activate and Elevate, and they're offering $350 to $700 off on tickets. They're two events. Activate, I believe, is more for the beginning investor, private lender that's really wanting to get into the industry, get some more education. And what better way to do that with the largest private lending law firm in the nation? I think that one's at Caesars. One's at Caesars and one's at the Wynn. They're 4 days, 2 and 2, back to back in Vegas. You could go to both. We will be at both with our cameras, as well as live deals to be able to potentially throw it back and forth, meet us in person. But that's Activate and Elevate here this month in less than 10 days. It's like February 23rd. I think that's coming to fruition. We'll be out there with our AI videos and things of that nature. Additionally, on YouTube, if you hadn't had the chance, subscribe to our YouTube page. That's Mobile Mailbox Money. See if I can sign in real quick, just give you a view of the page. We have about 950 videos on YouTube, which is impressive. Over the past 8 years, we're really 3 years, I've been uploading vlogs, going live, doing educational content. We were live at the Masters. That'll be coming up here in April. We actually go to the Masters every year. If you invest $1 million with me, we could possibly take you to the Masters and comp your weekend if you're a big golf fan. But we have our vlogs. I actually walked through lot 192 that we have a flip going that's actually here, and I'll talk to you about that in just a moment. But check out this vlog. I walk through the property, kind of talk about the opportunity and how we seller financed this home without ever owning it, right? To hear that live as I walk through the property, talk about it, evaluate the home. We'll do an additional inspection with our staff. But my initial walkthrough actually was deemed successful. Why is that? Well, lot 192 is a listing with Wynn Mobile Homes. It's a for sale by owner that listed with us, right? And now has found a buyer. The buyer needs financing. There's not much financing on manufactured housing, and they speak Spanish, which creates a challenge for them to even navigate the stringent criteria that someone has to facilitate, as well as the language barrier to even deal with a lender was creating real challenge for them to even buy this house. So how is this structured? I laid it out in my vlog, but let's just talk about it live. This home, I believe, was listed at $80,000, right? The buyer borrower contracted the property and needs financing. So they're under contract. Their proposed offer was $80,000 and they need financing. So how do we provide the financing on this property if we don't own it? We negotiate a discount from the seller at $80,000, get them down to $70,000. I would like to get $20,000 off, but in order to usher the deal forward, their bottom price plus commissions is $70,000. So I think there's an $8,000 commission paid to the brokerage and the agent. So they're walking with $62,000. Our price is $70,000. Got them at a discounted price point. The value of this property facilitates our interest, right? It's in a family park in the South Mountain area in Casa de Francisco. $70,000. I negotiate a discount from the seller. The buyer borrower is paying a pref for the financing. We actually upped the price to $103,000, I think it is, right? So we bought it. We're buying it at $70,000, selling it at $103,000, and the buyer borrower, I think, is putting $5,000 down. So $107,000. About $97,000. This note will come available, and we will effectively buy, double close, seller finance, and leverage that position, whether we pull it into the fund or sell that to another investor. So we'll make probably $20,000 on this property that we don't even own. But because of our relationships, niche market expertise, I hired a Spanish sales speaking agent from Business Network International, and our ability to even raise the capital to do this transaction really kind of puts big picture of how our strategy has progressed over the past 8 years. This is one of, I think, 3 deals that we have like this on the table this month, where we created a transaction out of thin air of something in an asset that we deem quality asset in a quality community, and we didn't even have to buy the house technically up until we close, and we already have actually an approved buyer for this property. So the borrower has been approved. We will do this transaction. I was talking to James about it the other day, kind of going back and forth of what that looks like. And it's in the same park as the note we just sold, lot 132, or that we have a commitment on for 121,000. Lot 132 is still 3.2, and so is this property, lot 192. It's a 3-bed, 2-bath. It is an older unit, but if you notice in the photos, it's been rehabbed. So this property has actually already been rehabbed on the interior. We didn't have to do anything. It's got the granite counters there. I'm pretty sure that is some new cabinetry, tile backsplash, and square footage is like 1,250. So 1,250 square feet. The buyer borrower, why are they paying a higher rate? Why wouldn't they just pay cash or get financing elsewhere? There's probably 2, maybe 3 lenders in the nation that will finance manufactured housing just because they don't understand the asset class. And that's 21st Mortgage, Teamwork Mortgage, and I think one other that we've actually converted with, right? So that buyer borrower has limited options to buy the house that they want to buy. That's where we stepped in at a higher convenience rate. They can pay it off or refinance at any time, but their payment, and it's important to mention, matches or beats market rent. So opposed to them going into South Mountain and paying $2,500 a month in rent, they buy and own this corner lot in a family park, and what's their total monthly payment? Let's just run that through the calculator real quick. At $103,000, they're putting a $5,000 down payment. They're paying a 1% pref on 20 years. The unpaid balance is $98,000. Their home payment is $1,290.45. Their combined lot rent and home payment is $2,118. So average rent for a 3-bed, 2-bath in that condition is easy $2,500 a month. We just saw it in Mesa. This happens to be in the South Mountain area, but still a desirable area at $2,118. Where in comparison, they'd have to go rent because affordability, a single family property, disqualifies them even from the conversation of ownership, but they can own this quality home in a family park where we've done a tremendous amount of transactions in this area at $103,000, $98,000 finance balance or acquisition. So you can buy this note actually in the same park and much deeper of a discount, about $20,000 in the home that's in the same park at $1,290 a month. So over $13,000 a year in passive cash flow. Does anyone have any questions today? We went over, I think, like 1, 2, 3, 4, 5, 6, 7, about 7 notes that we have pending right now, which is literally life-changing deal flow. And how do we create deal flow? How have we created relationships in order to do this amount of transactions? We're not just some internet sensation or anything of that nature. We're entrenched in the market with institutional relationships. What does that mean? That means we're vetted by Calam Properties, Equity Lifestyle Solutions, Kingsley Management, Sun Communities. I could list off a Treehouse Group, Roots Management, Park Haven Communities. Those are people that own mobile home parks and their portfolios are $100 million and up. We're institutionally recognized by those individuals to do transactions within these communities. Where else do we have relationships? We're in one of the largest chapters in the nation of Business Network International. A lot of people call that a cult. You know, it's kind of cult-like a little bit, but it's in the want for doing more business and building relationships. It happens to be the largest referral network marketing association in the world. So we are in the largest chapter, one of the largest, probably top 5 in the nation. Collectively, our chapter, the Connectors, we meet on Wednesdays at Orange Tree Golf Course at 11:15 here in Scottsdale, Arizona. If you're in the local market of Arizona, you want to make some contacts or really just see the room. Maybe you have a business that you'd like to showcase. You know, would love to extend that invite. And through Business Network International, we actually created a cigar club. Our cigar club is the Stickmen. We have about 20 high net worth business professionals that have actually officially been dubbed members. Me, Brian Garrison, Apes Plumbing and HVAC, and Lou Pingtella in the Right Choice Insurance Agency are actually founders of the Stickmen Cigar Club. And we meet weekly after our Business Network International meeting. In most cases, it's at Churchill's Cigar Lounge in Scottsdale, Arizona, around 1:30 every Wednesday. I think next week we're switching it up to Ambassador Cigar Lounge. So if you like to have a stick or you want to be in the room with $100 million worth of business being transacted, that's the place to be with other industry magnates and experts in trades, real estate investment, hedge fund, insurance, pool, GCs. You got general contractors, roofers. Shout out to Russ Hyman from Griffin Roofing. You know, my relationships are paid in spades from Business Network International, as well as I don't want to hesitate or fail to talk about our new main corporate sponsorship and partnership with Arizona Real Estate Investors Association. Got a bunch of hearts going up in the chat. You know, relationships are make or break in the industry. We're not just here online, blowing smoke. We're entrenched in the market with the largest real estate investment association in the nation, the largest referral network marketing association in the world. And yeah, go ahead.
I have a question for you. And I know this is a question that probably everybody has and isn't asking. And that is, can we get a basic breakdown of what is the difference between a couple of different types of notes that we sell? All of the notes that we talked about today are 100% assignment notes where the borrower is put in the relationship with the investor. But we also have construction notes. I just added a brand new construction note onto our mobile mailbox money site today at 72 Winter Cove. And a lot of people ask me, what's the difference between a construction note and 100% assignment note? And I'm thinking that there might be some people on here that have that same question.
Love it. Why don't you explain?
Well, a construction note is a note that we've done a new acquisition and we are looking for the funds in order to rebuild, fix, and get the property available for sale. We have a interest-only payment on a 1-year contract for a construction note. And then once the construction is completed and the property is ready to be listed for sale, we obtain an offer on the property. And then we contact the investor who's holding the construction note and say, okay, you have 3 options. Either you can cash out of your construction note at this point, if that's your choice. You can roll over your construction note funds to another construction note if you prefer to stay in that short-term game. Or what most people do is they get the first right of refusal to take the 100% assignment note by adding in the difference of whatever was left over between the construction note and the sale amount. It's also a couple points higher interest rate, and it's an amortized note over 20 years. And we do have a brand new one that just went on the system today, 72 Winter Cove. It's a property that we feel is going to be worth $99,000, $100,000 when it goes retail. We're looking for a $60,000 construction note on a 1-year term, paying $600 a month deferred, if you choose that option. And then, let's say we put it for sale on the market for $100,000 and the buyer puts down $10,000. Now we're at $90,000. You've put in $60,000. We're going to come to you and say, okay, do you want to put in the other $30,000 and take it for 20 years long term? Or, what is the option that you choose out of the opportunities that we provide?
Great explanation. That construction loan's at 75% loan to value. Oh, you got feedback. Great information from Catherine. Appreciate your feedback.
It's actually only 60% loan to value.
Yeah, so low loan to value, short-term liquidity that's drafted at an annualized contract, but likely that home will sell within 3 to 6 months is the objective. And I'm getting all kinds of interactions here now. We're talking about short-term opportunities. So I appreciate you bringing that up, Sonny. That's a private lending component where once the property sells, you have the option to roll to another construction note or go liquid. In most cases, they roll into another opportunity because of our vast amount of deal flow. And shout out to Rodney. Thanks for the information, Sonny. That's a little bit different of an avenue, but you're effectively hitching your cart to a qualified operator and still earning a double-digit interest rate, whether paid monthly or deferred until the sale of the property. We drafted at a year just out of convenience. This is a passive investment strategy. I'm not trying to tap you if the home sells in 30 days. Doesn't sell in 6 months. It could take 6 months. It could take 3 months. It could take 8 months. It depends on the market, how we have it priced, and the availability in the area. So we drafted it.
There are some real benefits to this program too. If you're new to note investing and you're not excited about getting into bed with the situation for 20 years right off the bat, you can get started at a 1-year term and you don't have to, you can see how it goes. The other benefit is in a construction note, Win is your borrower. So we guarantee the payments. You're not at the mercy of making sure that your borrower pays. We guarantee the payments. So there's a lot less risk involved in a construction note.
All great points. Does anyone have any questions about short-term private lending? So if you are here in Arizona, second Monday of every month is the Arizona Real Estate Investors Association Phoenix Real Estate Meetup, located at Venue 8600 in Scottsdale. 5 o'clock, second Monday of the month, every month. And there's upwards of 200 individuals in and out of the room, operators, lenders, new school investors, old school investors, and all the above, to provide you further utility and data that's provided within the presentations from Tina Tamboer, the senior housing analyst of the Cromford Report. The Cromford Report is a data provider for real estate data behind days on market, average price point, what's a buyer's market, what's a seller's market. We're in a plateaued market right now, and some areas are even buyer's markets. So it's important to stay up to date, at the end of the day, to make a savvy decision, which is hard to do at the end of the day, and to get credible information, as well as see possibly our booth that we have every month there, is worth its weight in gold. Well, today is brought to you by Silvercrest Opportunity Fund. I'm raising $1 million right now. I need $1 million so I can absorb these notes into my fund, whether it's $50,000 or $1 million. I can help you, accredited 506C Reg D through Silvercrest Opportunity Fund, earn a 10% return for a 1-year term paid monthly, a 12% return for a 3-year term paid quarterly, or a 14% return for a 5-year lockup in an income-oriented investment strategy. To make monthly income at a double-digit interest rate like that is virtually non-existent. To be able to hitch your cart to a qualified operator and start cash flowing in 30 days, I don't know of many other opportunities like that. So Are you open to opportunities in other states as well, or are you currently focused only in Arizona? We've looked at other markets, possibly the Nevada market, Texas, Florida, where usury facilitates our rate. We want to be able to make a high rate within our investment, as well as operate legally. At the end of the day, it's important to be above board. For us to do business at scale, we have to do it correctly at the end of the day. And the Florida equation is a challenge because of insurance. You have your higher insurance costs because of natural disaster risk. And our lack of boots on the ground, where it does potentially make sense, is we hitch with another operator in that market and throw some gasoline on their already operating potential strategy, whether they're fix and flipping SFR or actually doing manufactured housing, where we can throw our bells and whistles and expertise of the lending component and our branding that's institutionally recognized in these other markets as well. We're brought up on their national sales meetings to be, and have been even invited into those markets. But for someone that's already operating, that's where the rubber meets the road. And we'd love to potentially entertain that if that's somebody watching here today, and potential for like a franchising component or a partnership or a joint venture, open to all of those potential conversations. If you like, I'm going to put my personal phone number in the chat. I'm sure Sunny will put her information as well. I open myself up for individuals to call me in the want for transparency and the availability for direct access. So don't hesitate to call me today if you have questions or really just want to become a little bit more comfortable. There's my phone number within that chat. Please call me. I would love to talk to you direct. If you want to surf the homes that we have out on the market, winmobilehomes.com is our dealer of manufactured housing. Me and James are partners 50-50 within our business, Win Mobile Homes, and that has finished products up. You can surf, the wide variety of homes we have available. You could buy a note at mobilemailboxmoney.com. If you've been to our website before, we've updated since. Isn't that right, Sunny?
Yep.
So we got some new notes up there as well. We went through stuff pretty quickly. Due diligence takes time at the end of the day. So don't hesitate to go there. I think our chat's open even on the website. So you could talk to Sunny actually direct with real live due diligence questions. She works pretty much 7 days a week. So that chat is always open and someone to reply to. Or you could invest today with Silvercrest Opportunity Fund. That's silvercrestopportunityfund.com. We have our credit strategies tab where you can view further into the opportunity, or even call me today and talk to, potentially, if you like, talk to a sales agent at 602-888-CASH. If you don't see something that you like on our website, or you're failing to move forward because of uncertainty about the operation, go look at the YouTube, check out the walkthroughs, the due diligence, the education, the testimonials we have on there, and all the above. I'm going to release y'all a little early today. We had some great interaction in the chat. We appreciate each and every one of you being here today. This is the Family Bank Mobile Mailbox Money Mastermind. And we do this weekly, every Thursday at 1 o'clock Mountain Standard Time. We're getting super interaction in the chat. Got some hearts going off. Appreciate your interaction today. Looking for $1 million. If you're that investor, I'd love to talk to you. We appreciate each and every one of you being here today. That's one step closer to financial freedom. What do we call that? Mobile mailbox money. Y'all have a great day. Bam. So that's what we do here at Mobile Mailbox Money, creating relationships, creating notes, overcoming obstacle in the market of affordable housing in a time when it's needed most. Call me today at 602-888-CASH. We have notes for you.